What's up, guys? It's Dan from Coin Bureau Trading. Today we're going to talk about the upcoming September crash that everyone is talking about and why it's probably not going to be as big of a deal as many people are making it out to be. Spoiler alert, I actually think September could be a very big green month, and I'll explain why. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So I'll start by quickly recapping, guys. As I mentioned in yesterday's video, every single time the total crypto market cap gets above a key resistance level, it tends to rally for around 6 to 8 weeks. Of course, there will be potentially a couple red weeks in there, but you're looking at basically 6 to 8 weeks of up only. And of course, I believe that this up only price action, the 6 to 8 weeks, is probably starting this week, latest next week. But regardless, basically based on this historical trend, this recent historical trend, that it looks like basically the total crypto market cap, like crypto, whether it's Bitcoin, Ethereum, altcoins, whatever, are going to keep rallying, into sometime in late September, possibly into early October. Of course, when I mentioned this, many people in the comments were saying, but wait, everyone is saying that there's going to be a huge crash in September, that there's going to be some kind of pullback. And believe it or not, guys, but I'm actually kind of in agreement with this, but I have a little bit of a different analysis. Some of you guys might remember that I also am tracking these kind of like Bitcoin mini cycles. I guess just to quickly recap, a mini cycle is basically this 10-day period where Bitcoin either melts up or melts down. And the most recent Bitcoin mini cycle started on August 9th, and it's probably going to end in that case sometime around August 20th or August 21st, which is next week. So we roughly have, let's say, another 7 days of Bitcoin likely basically going up to 130,000. So like basically up only price action, again, classic a mini cycle melt up. But the important thing to note here, guys, is that in between these mini cycles, you'll notice that there's kind of these like 2-week resetting periods where after a big rally, prices will go down, and after a big down mini cycle, then prices will kind of recover. So you're kind of resetting sentiment and positioning in between these mini cycles, so to speak. It's actually pretty interesting. But anyways, of course, logically that suggests is that after Bitcoin rallies up to 130,000, sometime next week, by August 20th, August 21st, then we would probably get another resetting period with Bitcoin probably drifting down. Who knows? Is it going to be 123,000? Is it going to be 120,000? Who knows? But the key takeaway, I would say, is that Bitcoin is going to be resetting. It's going to be falling from a much higher level than where it is now. And the same is true for most altcoins. So if you're sitting and thinking, I'm going to wait until the September pullback before allocating, there's a high chance you're going to be allocating at much higher prices, even when prices pull back, because they might not pull back to levels that are much lower than where prices are now, if that makes any sense. But all of that aside, point being is that actually, yes, I do see a little bit of a pullback coming sometime later this month, and it'll probably last into sometime in early September, just before the next Bitcoin mini cycle starts. So I think sometime around September 6th or September 7th, basically going from, let's say, I don't know, August 21st to September 6th or 7th, you're going to have some like chop and grind, maybe a grind lower, right? And I'm sure that we're going to enter September in the red, and people are going to say, oh, that's proof. That means that, we're going to see this historical trend of Bitcoin, crashing in September or whatever. But the thing is, guys, if you actually look at Bitcoin's monthly returns in September, you'll notice something, that there's only 2 months in the last, whatever it is, 12 years, where Bitcoin fell by more than double digits, basically. In most cases, it kind of fell somewhere around 5%. And you can see down here is that the average loss in September is around, 3.77%, and the median is somewhere around 4.35. In either case, it looks like September, in a worst case scenario, would be like a 5% drop in Bitcoin, which again is not necessarily some big massive crash, right? So that's kind of one thing to keep in mind. But the other thing, guys, to keep in mind, and I think is even more important, is this. What you're looking at is Google search trends for Q4 cycle top, which is probably related to crypto, and you're also looking at Google search trends for 4-year cycle. And in case you guys didn't notice, these search trends are going parabolic. What does that tell us? Well, what that tells me is that most people are familiar with Bitcoin's 4-year cycle. Most people expect a cycle top in Q4 or sometime early next year, right? And if most people expect a Q4 cycle top and they know that prices are going to be crashing in September, what do you think they're going to do? They're going to see that as their last chance to get in at a lower price, right? They're going to say, oh my God, the top is coming in, November or December, or pick your month, right? Or January next year. And the September crash, that's going to, like, historically speaking, that's going to be my last chance to get in. So I'm going to basically buy the dip as much as I can. And I think the result of that is that the dip is going to be shallow and short-lived. And not only that, but I think it's possible that September could actually end in the green. Again, I think September is going to start in the red. Everyone's going to say, okay, September is going to be red. I better start, DCAing into the dip, buying the dip, whatever. And then by the middle of the month, by the end of the month, you could see prices even much higher, because people are saying, I'm not going to wait around until the all-time highs come in Q4. This is my last chance. I'm going to buy Bitcoin. I'm going to buy altcoins now to be prepared for that Q4 cycle top. And again, in contrast to prior cycles, this is the thing that is quote unquote different, is the awareness that Bitcoin and crypto is likely to top in Q4, and that everyone is familiar with the 4-year cycle and is actively searching it and researching it now as we speak, right? So the expectations of a Q4 top and like the understanding of the 4-year cycle is literally at its highest level based on Google search trends. Okay, in literally in like by magnitudes, like in crypto's history. So again, I think that this is going to have the practical psychological effect, is that when September opens red, people will say, okay, September is going to be red. I'm going to buy as much as I can. And when enough people do that, especially with all these like treasury companies and whatever that are probably also going to do the same, right? Like in their own models, they're going to say, well, September's a red month, so now's a good time to deploy more into Bitcoin or more into Ethereum or more into Solana. So yeah, that's one thing to keep in mind. And I do think that that could result in a upside surprise in September, which again is worth noting. We have seen green months in September before, but of course, those were not like kind of a post-halving year. So that's kind of the little nuance in there. But of course, the severity, the last thing I'll mention about this is that the severity of the drawdown in Bitcoin or Ethereum or any other altcoin will ultimately depend on the catalyst that causes that dip, that pullback, whatever. Is there going to be a catalyst in September? That's something I think that is a little bit up for debate. But before we get into that, guys, I do need to tell you about the Coin Bureau deals page. That's where you'll find our Bybit deal, which has up to $60,000 in rewards. Taking advantage of this deal is super simple. Just click the link in the description or in the comments. It takes 2 seconds to sign up. If you can't use Bybit or already have an account on the exchange, then do check out our other deals. We have deals on other exchanges, as well as like trading courses like Aaron's Better Trading Course. We have deals on hardware wallets. We have deals on tax tools. We have deals on crypto trading bots. We have a merch store. We have everything you could possibly need. All these deals and everything are completely free. They don't cost you a thing. When you use them, it helps us out. It helps out our partners. And of course, it helps you out. So it's a win-win-win for everyone. Again, check out the links to all these deals in the comments and in the description. So of course, guys, that brings me to the question, what is the catalyst for the September pullback likely to be? Benjamin Cowan recently posted, and I'm not calling him out here. It's actually just something that people were sharing with me, because people were saying, hey, people are calling for a pullback in September, and Ben thinks that it's going to be the trigger for the pullback in September would be Fed rate cut, which is likely going to cause the long end of the yield curve to rise, and that would be Ben Cowan's guess. I guess just for a quick recap, when long-term bond yields rise, then that causes markets to fall. And Ben's theory here is basically that when the Fed starts cutting rates, then this is going to basically result in a loss of confidence in the long-term value of bonds. That'll cause a sell-off in bonds, and that'll cause yields to rise. The only problem with this explanation, in my view, is that investors already expect a 95 or I guess 96% chance of a rate cut in September, and they're even pricing in potentially a 50 basis point rate cut. So basically, it's almost 100% chance essentially of a rate cut in September. In other words, the markets are already pricing in a rate cut. So if Ben was right, and we were actually going to get a rise in the yield curve as a result of a rate cut, we would already be seeing that now. We would already be seeing the dip now, because investors and the markets, and whether it's bonds or stocks or whatever, they are already pricing in these cuts now. And you can make the argument that this is part of why everything is rallying so much, is partially because investors are expecting rate cuts. So again, if investors are already expecting it and they're acting as if it's already happened, then of course we should be seeing the long-term yield curve rise now and stocks go down and crypto go down, but it's not happening. They're actually going up. So that's probably not going to be the catalyst. And of course, if you don't believe me here, we can even look here, just like markets have convinced themselves they'll get a September interest rate cut. Now they're eyeing a double reduction. So again, it's even if you don't believe my analysis, you can listen to the mainstream media, and they will say the same thing, is that markets have basically priced in a rate cut, but you're not seeing yields rise and you're not seeing markets fall. So it's probably not going to be that. Not only that, guys, but of course, we're also, when it comes to stuff like these tariffs, this has also kind of been like resolved. All these tariff deadlines have been delayed into, I think it's going to be like early November, specifically for Mexico and for China. So all the tariff stuff is kind of gone. So again, like around rate cuts, that doesn't seem to be the thing. Tariffs, that's probably not going to be the thing. So the only kind of like viable, let's say, catalyst that could cause, let's say, like a big September crash would be some kind of geopolitical escalation. Some of you guys might have heard that Israel is reportedly, allegedly planning on attacking Iran in the coming months. And according to foreign policy, this could happen as early as late August, which, lo and behold, that lines up very nicely with this kind of like a resetting phase in the Bitcoin mini cycle, right? It would be pretty crazy if, yes, we get some kind of quote unquote September pullback, but it actually starts sometime in late August, and it happens as a result of some kind of escalation in the Middle East, and then it lasts sometime into early September, and then it's resolved like the last one was after whatever it is, 10 days. days or 2 weeks or whatever it was, right? So we could see a similar situation where Iran starts attacking Israel. That causes some fears and instability, but that only lasts for a little bit. And again, according to a foreign policy, this attack is coming in the next few months, and it could come as early as late August, which again would be consistent with a Bitcoin mini cycle, and again could set the stage for September being a green month overall, because you would basically have, that crash, that quote unquote crash, happen sometime earlier in the month. Again, many people would take that as their last chance to basically buy in before prices go higher. Again, basically, crash into, let's say, between late August, early September. Everyone is buying the dip like crazy. That causes the crash not to be as big as people expected, and people are buying. Then this whatever conflict is happening, it gets resolved, let's say, pretty shortly afterwards, hopefully, right? And then you see the crypto market melting up into the end of September, and it closes like mildly in the green or something. That's one possibility. Again, like there's no way of knowing, which catalyst it's going to be, but I think it's safe to say that it's not going to be Fed rate cut, Fed rate cuts, yield, stuff like that. That would already be happening if it was true, and it's not going to be anything related to tariffs. So logically, that only leaves one thing, and that's of course some kind of geopolitical escalation. And it looks like something between Israel and Iran is the most likely thing. So again, yeah, and again, that could start as early as later this month. So not something that is going to be happening necessarily throughout all of September, because again, the last one only lasted 10 days. But we'll have to play things by ear. Anyways, guys, if you did make it this far and you did find that information helpful, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.